Anybody here who's new here as a trader, or, struggling as a trader, trying to get where they're gonna go? Good. So I got a good audience. You guys know what you're talking about. So today, in today's day, this is probably the best time in the history of trading to actually learn how to trade. With the advent of internet technology, things have just gotten cheaper, better, faster, and retail people like yourselves have access to information and tools that frankly you could have never gotten before. Back in, 20 years ago, right? Trading was a whole different ballgame. You had to pay so much money for tools. You had to have so much money for capital. You just didn't have access to the things that you do now. Now, you guys have a level playing field and an advantage coming in because not only can you get tools like Trade Ideas and TC2000 and stuff to really supercharge your trading, you have access to information. You could go on just bullshit like YouTube, right? And you can learn anything you want to learn. And so there's really no better time to learn how to trade as long as you've got the right processes, the right mindset, and then the right setup to actually go out and do it. So what I want to talk to you guys about a little bit today is how to use a little bit of technology like a Trade Ideas to come in and supercharge your trading using a handful of specific patterns or trading setups that you can go out and repeat every single day. So as a trader, for me, I'm a very simplistic trader. I have a handful of things that I really like to do. So I break up my trading day into 3 parts, right? So you have your morning, that's your first hour of the day. You have the middle of the day, that's 10:30 to 1 p.m. Then you got your power hour, 1 p.m. to 4. Most people don't realize that every single part of the day, those 3 parts of the day, you have to actually trade a vastly different trading style. So for those of you guys that trade, say, patterns, right? So you have your morning pattern. Say you want to trade a little flag pattern. That type of pattern doesn't work midday. It works great in the open, but if you try to do something like that midday, oftentimes that pattern will fail. As the day goes by and gets deeper, you need longer patterns. You need deeper pullbacks. Your trading strategies actually change. So when you guys are going about thinking about how you're going to trade and what you're going to do, always remember, first of all, the time of day is going to dictate what kind of trading patterns and trading setups you're going to do. The morning, which is what I'm going to talk about today, is my favorite time to trade, but also the one that in the beginning will cause you the most heartache, the most losses. The morning is about price discovery, price volatility. It's where the action is, right? You ever get in front of the computer right before the market opens? You're pretty excited, right? Stocks are moving around. That's where you can make the most money, but frankly, that's where you also lose all your hair, right? That's where things can go really, really crazy. But if you have a handful of techniques and strategies that you can use and duplicate every single day, then what you can start to do is corral and harness the power of that volatility and then use it for good, right? And so really, for me, 85% of my profits come in the first hour. Middle of the day, I statistically actually lose money. Can you trade middle of the day? Sure. I lose money because, I have ADD, and after the first hour, it's gone. End of the day, I can come back, refresh, I make money again. So that first hour is really, really important. You guys don't have to trade all day. I mean, frankly, if you want to be a trader and you want to sit in front of your computer all day, that's retarded anyways, right? Go out and be a doctor. Go do something else. There's a lot of different ways to make money in the world. Don't sit in front of your computer all damn day. The open is where you can really go and get everything you need. So, quick intro, why I trade this stuff. So, what we need to do to trade the open is to have just a very, very set, simple routine, all right? So, when you think about trading, this is how I map out my day. I put stocks on my watch list based on its daily chart. I like the daily chart for XYZ reason. It looks explosive, it's breaking out, it's trending, whatever it might be. So if you're day trading, now you got this stock on your watch list. What do you do with it? Anybody ever have a problem? Okay, I want to buy Tesla. I put it on my list. Market opens. What do I do with it, right? How do I actually get in? That's the quintessential problem that all new traders have, right? You don't know. So what we do in how you want to trade, you want to map out your day. So if I put a stock on my watch list, now I know it's on my list. At the open, that first hour of the day, I've got only 3 patterns I can do. What you want to always do is map it out. Stocks can open up either weak or strong, right? Okay, so if a stock opens weak and it's on my list, then I can do XYZ pattern. I go for a red to green move or something along that end. If a stock opens strong, meaning it spikes up at the open or it gaps up, well, now what do? Well, you have 2 opportunities that we're going to talk about. One is an ORB pattern, which is a breakout pattern where you're buying something on strength. Okay, well, what if it doesn't have strength? It pops up and it comes back down. Well, now you need a secondary pattern, some type of pullback strategy to get into that stock as it's pulling back to support, and then you're ripping it back into the breakout. Then we'll talk a little bit about just achieving your peak performance, because frankly, that's what trading is. When you think about trading, you're just a nerdy athlete, right? It's really about getting the job done and doing what you know. See, a lot of times in life, we know what to do, but we don't do it, right? For example, I ate a couple slices of pizza yesterday after we had 15 beers. I know I'm not supposed to eat that pizza, but I ate it, right? We know we're not supposed to have cigarettes, but boy, they're fun, right? We know a lot of times what to do in life, but we just can't do it. So much of trading is about getting yourself to click the buttons when you know you're supposed to click the buttons. And that's the hard part, because that's all life, right? We screw up all the time, even though we know, I really shouldn't be doing this. And so we'll talk a little bit about how to achieve that peak performance and build that discipline. So let's get into some trading patterns. So first thing I want to do, this is something I do first thing in the morning. I whip out my trade ideas. Trade ideas has a preset filter that you can do, and we'll play around with it. When you go in your trade ideas and you hit pre-market, a button will come up, something will come up where they'll show you gappers. Stocks that are moving up 3% or down 3% or more. Why do I do it that way? If a stock is moving up or down 3% or more pre-market, most likely there's some type of news out, right? It's got some type of earnings out. It's got some type of PR out. Something about it has come out that's causing it to move pre-market. So why would we want to trade something like that? Well, technical analysis is just technical analysis. If you think you're going to draw a squiggly line on your chart, some little triangle, and a stock is going to explode 30, 40%, doesn't work like that. You can draw all the squiggly lines you want on your charts. It doesn't mean you're going to have a hot stock. You're only as good as the stocks you trade, right? We have a basic moral obligation to be in the hottest moving, best moving stocks that fit our style. So I want to trade stuff that has a PR out, some type of earnings. Those stocks have a fundamental catalyst, something that's causing it to move up. And then if you can marry that with technical analysis and the trading patterns you're learning, well, now you have a perfect storm. It would be like if Donald Trump and Celine Dion had a baby. It would just be this magical thing. That's what happens. That's what happens when you marry the fundamental with the technical. So I'm looking for stocks that open up 3% or more with high relative volume. I put on my filter at least 10,000 shares traded pre-market. The higher the better. Usually it's 50 or 100, but I like to put 10,000. I want to filter through them. What I start to look for when I go through these, I whip out my TC2000. That's my charting platform. I start looking at every single one's daily chart. Is the stock breaking out? If the stock is breaking out, good. Or breaking down if it's gapping down. But if it is gapping up into resistance, if it's a stock in a range, that's no good. The worst thing you can do in trading is trade stocks that are stuck in a range. You're literally the penis in between us. Like there's nothing you can do with it. You're just stuck in a range. So what we need to do is have stocks that are making explosive moves, right? Stocks that are breaking out have no supply overhead. Stocks that are breaking down, vice versa. So now we're going to have clean moves. When you look at technical analysis and you're looking at your day trades, if you think you have a hot pattern and your day trade fails, a good chunk of that is because the stock is actually not clean. It's not supposed to be breaking out. The big picture has the most influence on your little picture. So when you're day trading, you're drawing your lines, you're doing your patterns, they're not going to work unless the big picture is telling you it's supposed to be doing something. So we want to look for stocks that have good daily charts. We want to see if it actually has a history of making moves. You see a 10% gap on General Electric, and you're like, whoa, this looks really nice. Well, if you look at the chart, right, you'll know that this thing, General Electric, never moves more than 30, 40 cents. So it may gap 10%. It's probably used up all its range. It's not going to do anything. We want to look and find stocks that have range, that actually have a chance to do what they're supposed to do. And then the other part is float. You guys know what float is? Right? Float is essentially, if you want to look at just the number of shares that could be traded on the market. Right? Just an easy way to look at it. The lower the float, obviously there's less supply. So when you get something with a low float, they have the ability to make big moves. Now, a lot of times people think low float means small cap. I very rarely trade small cap stocks anymore. They give me gas. They make you stress. But I like trading low float stocks because they have that range. So for like a lot of years, Tesla was a low float stock. Netflix was a low float stock. You can have big time companies and still have low float. And those are the ones that are going to have range. So when you see a lot of these stocks, check the float real quick. Always have a tab up on your charting platform so it just shows you, right? So you don't have to look it up. Just have it set there. So we want low float. And then nighttime, I use TC2000 around my scans. So I run a 4% breakout scan every day that my mentor Paul wrote for me 12 years ago. I still use it. I use that every night too to see exactly what's moving. So now what do we want to do? First setup. So I told you we want to map out the day. If a stock opens strong, I'm looking for two things. If a stock opens strong and it starts to consolidate, I'm looking for an opening range breakout pattern. If it doesn't hold, then we're going to go to the next setup. So an opening range breakout is a trading pattern that you can take at the open that gets you early in the move. That's just about buying the break of the first consolidation in the most simplistic terms. So what we're looking for is a stock that has a spike at the open. Remember, you've already gone through the homework. You like its daily chart. You know its float. You know that it can move, right? That's why you put it on the list. So now what we're looking for, right, is a minimum 3 candles sideways. So it's got to sit in a range. 3 sideways candles. I use 5-minute charts. So you can buy on the third one. So you need minimum 10 minutes of consolidation before you can hit it. The reason I use 5-minute charts, 1-minute charts make me overtrade. Anybody ever tried trading 1-minute chart? You see patterns everywhere, right? It's like your whole chart is just littered with bodies. 1-minute chart, and you're brand new, and you have small amounts of capital, you will have no capital soon. You will blow it all on commissions. You use a 5-minute, 10-minute, 15-minute, whatever chart, elongate your time frame, you'll trade less, you'll have higher probabilities, and you will see the patterns just better. On a 1-minute chart, you're going to get a lot of noise. At some point, sure, when you get good, you may want to check the 1 minute and maybe fine-tune your entries. For me, I don't do it. I never look at it because I know I got a bad problem. I'm an overtrader. I always have been. It's like I joined the club, right? I, Kunal Desai, am an overtrader. And so I can't do those short time frames because, man, I'd end up taking 15 trades in the first 5 minutes. Easy way to lose, right? The problem with taking too many trades is that you just always one trade away from that bad one, right? It's not the losses that get you. It's that one that gets away. So the more trades you take just puts you closer and closer to that one that slips away. That one where you forgot to use the stop loss, right? The one you get a little stubborn on. So use a longer term time frame, stay yourself out of trouble. So I'm looking for minimum 3 candles. This works best in the first 30 minutes. So this is CGC, so this is a trade I took the other day. It's a little hard to see here, but don't worry about it. I'll point it out. Daily chart, breakout. You guys see that? So the daily chart's always on the left. I want to align on multiple time frames, right? So you have the daily chart on the left, your 5-minute chart on the right. You want to see breakouts of both in the most simplistic terms. So I like this chart, right? So it's on my list. So now what happens is at the open, the stock busts open. You guys see that? So now what I want is minimum 3 candles. You got 1 candle, 2 candle, 3 candles. When it takes out that opening range, I'm going to buy it and put a stop under my near support. I use on my intraday charts a 9 EMA and a VWAP. Those are my primary indicators I use. They're just they're good guides for exactly where to see the levels. So 9 EMA works really good at the open. VWAP works really good midday and on. All right? The 9 EMAs are short-term moving average, right? So it's your last 9 candles. So it makes sense at the open where there's momentum, that's the one that you're going to use as a guide for what's going on. So I want to go 1 candle, 2 candle, 3 candle buy, set your stop under the 9 EMA. Now, opening range breakout, what does that mean? It's at the open. So do you hold the stock all day? The open is about spikes. You take the spikes as they get. For me, typically, if I'm getting 2 to 1, 3 to 1, reward to risk, meaning I risk 30 cents, I'm up 60, 90 cents, I'm looking to peel out. I never just sell this to sell. I need reasons to sell, right, Mr. Mike? Got to have a reasons to sell list. So I don't just sell blindly, but that's when I want to start looking. I want to start scaling out of these things. When you're trading the open, it's only first hour. Remember, after the first hour, we're going to have a different group of patterns and different group of ways we can get into stocks. So we don't just have to hold on to it all day. A lot of times stocks will spike up, then they'll fade back, right? You gave up your profit. So take your profits at the open. So this is VTVT. I never trade small cap stocks, but every blue moon you get lured in. The thing with small cap stocks is they can be fun, but don't stay too long, right? You never want to be the last man to the gangbang. Second man, sure. Third man, even better. But never last. So, this stock spikes up at the open. Minimum 1 candle, 2 candle, 3rd candle sideways. When it takes out that range, you can buy it with the stop under your nearest support. Now, something like this, it might have 3, 4, 5 million share float. If it's got, you can't see it, but it's got 40, 50 million shares in volume, and your float is 4 million, that's pretty explosive. So when you think about explosion, like something that can move up 50% or 100%, think about where the float is, to how much volume is pouring in. If I see in the opening 5, 10 minutes a stock cover its whole float, that could be something that has a chance. Now remember, just as many times as they go, they fail. So if it doesn't work, you get out right away. The good part about opening range breakouts is that if it just breaks under support, you're out minus 5, 10 cents or whatever it might be. You want to use probably hard stops when you're brand new. I know nobody likes to do it, but if you ever found yourself holding a stock too long, past where you wanted to, you just had that problem, then you got to use them. Not everybody has the discipline to sit there and stop out mentally when they're supposed to, so why even try, right? If you can't do it, and you made that mistake once, you're going to do it again. So just use a hard stop, especially when you're new. Now, you can do these type of trades to the downside. So you got your trade ideas. Remember, you're mapping out your day. You get your trade ideas. I check at 9 a.m., the gappers. I never get to the computer more than 45 minutes before market opens. I know it's a big no-no, but there's no point. And the reason is when I get to the computer too early, I get emotionally invested in my watch list. All of a sudden, if I get to that computer at 6 and it's 9:30 and the market opens, I'm like, I love this stock, right? I know everything about it. Like, you really love it. So then when it doesn't do what you want to do, you're like disappointed. You hold on to it. You can rationalize why you should keep it. It's a good company, right? They make great products. Oh, the CEO has a beautiful smile. Next thing you know, you're really holding on to this stock. So for me, 45 minutes before the market, I pop on. That way I'm just hitting and running this stuff, right? Now this stock gaps down. One candle, two candle, third candle, it busts lower, you can take the short. Now remember, you start covering right away. Once you start getting your reward to risk, you start getting out of these things. What you will find is on the downside, on the short side, things just fall faster than they go up. It's just the way moves happen. On the downside, stock has bad earnings, everybody's running out the door. The lack of buyers, even if it doesn't have major volume, the lack of buyers creates that waterfall effect. So in today's market right now with all this volatility, earnings season's coming out. What's out right now? What you'll start to see, you want to look every morning, those 3% down gappers. Market's nasty right now. Stocks will get hit hard if they disappoint on earnings. When the market's hot and you have bad earnings, they may go down for a couple days, they just get bought up. When the market has this kind of volatility, every stock will be punished for not hitting their earnings. So you want to start running these scans, you're going to make a lot of money to the short side. Same type of deal, this INTT. This stock shows up on my trade ideas on the gap down. Very, very simple, right? The key to all trading is, can you wait for the pattern? If it doesn't show this pattern and it doesn't show this consolidation, what do? Nothing, right? That's the hardest part of trading, is sometimes you love it, you want to get into it, but it doesn't show you what you want. If you don't got what you need, you just leave it alone. Gaps down, sideways consolidation, minimum 3 candles. You can take the short as it breaks lower. There's a very, very simple pattern. Many of things in trading can be simple, but you got to wait for it, and that's the hard part. You know, as traders, if we know something's going down, we just rush to get into it. But remember, knowing that it's going to go down doesn't mean anything. You've got to get it down when your risk is low and the inflection point is there. Trading is all about trading around inflection points, meaning what's the level or what's the spot where it starts to speed up, right? We're in the business of opportunity cost. Me sitting in a stock all day doesn't do anything, but me catching it at the exact time it's going to bust loose, well, that's bang for the buck. Now you're holding it for 15, 20 minutes, and you make still 90% of it, right? If you had 8 hours, you can make 100% the gain, or you can make 80% of it in 5 minutes. What would you take, right? Timing is everything in trading, especially day trading. When you're new, you'll have all these amazing ideas, you still lose money on it, right? You ever see it happen all the time? You see a stock goes up 200%, and you're like, damn, I lost on this thing. How is that possible? It went up all day. That's timing. It can happen in day trading, so timing is everything. There's not just capital, but there's mental capital, right? You have your capital, but your mental capital is just as important, your psychological capital. A lot of times when you see the move, but you get in too early, you've taxed yourself out of the day before it actually happens. I do it all the time, like, fuck, I'm done with this thing, right? You leave, 5 minutes later, your buddy's like, dude, this thing just exploded. And you're like, oh my God. Why, right? And that's going to happen. That's why we want to trade around those inflection points. WHR, what do you see down here? Shows up on the gapper list. Always, when you think about trading, think of it like this. You're a lawyer, and you want to build a case for why you should be in this stock, right? You want to always map things out. Why should you be in a stock? It all starts with first daily chart, right? You're a lawyer. A stock has to prove beyond reasonable doubt that is worth your time and your money. So you always start with your daily chart. Is my daily chart breaking out or breaking down? Check. What's the volume? Is it accumulation, distribution, high relative volume, low relative volume? Check. Where are my moving averages? Do I got support, resistance? Check. Is it aligning on multiple time frames? Check. Do I have an intraday pattern that I like? Check. Now you're going through this checklist. If everything goes off the way you want it to, then you can take the trade, right? So now you gap down. 1, 2, third one, short, Set your stop above nearest resistance. Start shredding it to the downside. Remember, it's an opening range trade. You get out quick. So now what if a stock busts lower or higher at the open, but it doesn't consolidate? Remember, we're mapping out our day. We have two options. One, opening range breakout. Breakdown's a strength play. You're buying or selling on strength or weakness. But what if it pops up and it starts coming back? It doesn't want to consolidate. Good. We have a pattern for that too. So now you got one for strength, one for weakness. That's it. If you can keep it simple like that, you can go out and make money every day. So what we look for in a first pullback buy? Momentum stock does a strong run in the open. It doesn't want to ORB, so it starts to pull back. What we start to do is we start to watch it around that 9 or 20 EMA on its 5-minute chart. Let it pull back. What we want to see is it hold somewhere, right? I usually wait for one green candle to hold. I don't need too much confirmation. One green candle to hold there is enough for me because my risk will be tight and I can get out if it goes against me. A lot of times in trading, we want so much damn confirmation. You know, you end up being the president of the confirmation society and you miss out on a lot of moves. In trading, a little bit of confirmation and having a better reward to risk is way more important than sitting there and getting all the confirmation in the world, and then you got to chase the stock. See, when you get confirmation too much, you got to buy the damn thing so high, and your stop loss still got to be at the same spot, so you skew your reward to risk ratios. So I'd rather be in early and anticipate if I know the pattern is strong, because my risk is going to be a lot lower. That's why, like when you buy Breakout, right? Like you're always trying to figure out where to put your damn stop loss. The thing's moving up fast. You got to chase it. Well, if you know it's going to break out, why not nibble on a little before it breaks out, right? In a hot market, you see a breakout pattern, it's probably going to go. So why would you wait? If I can get better reward to risk ratio, I'm more interested in that than getting an extra 5% confirmation. So what we're looking for is this a trade I took in TVIX the other day. So the market's been tanking, TVIX has been flying. When the market goes down, this is kind of like your go-to that you can whip out. So TVIX gaps up on strength. You see that? So now it sits around for a little bit of time. TVIX never ORBs, by the way. I've just noticed that it never does it because it's a play in the market. But it almost always, after it gaps up in the markets like this, it'll start to pull back. So the light blue line's your 9 EMA. It'll start to pull back. As the day goes on, your 9 EMA catch up on it. Once you get a green candle to hold there, that's your spot. As it holds, you buy, stop under that last low in the 9 EMA. Now you're going to be into this thing as it breaks out. You're going to be in first. And that's a lot better than being last. So wait for that pullback to the 9 EMA. Now, I like this type of pullback play for a couple reasons. Most people that do breakouts, they fail as traders. They move too fast. They can't manage the risk. They can't control their emotions. When you buy stocks that are pulling back to support, you get to actually watch it, right? You're watching it pull back. Then you see where it holds. So now you know where to put your stop loss. You actually have a chance to watch it. It slows the trade down and the process down for you guys, where you can actually in slow motion figure out where you're going to buy, where you're going to put your stop loss, and where could it go. Breakouts are awesome. I trade breakouts all the time, but it creates FOMO. You got to think fast. You have sometimes seconds to get in, and you got to ask yourself, am I chasing this thing or not? Is my risk fine or not? And when things are moving around fast, you make bad decisions. A nice pullback trade will get you in before the breakout. Your buddy will be buying the breakout, and you're like, I was in $1 before. I'm selling into you. Nugget. So on the daily chart, this stock is showing a base breakout pattern. So it's been basing out for months. Now, finally, it's starting to come out of range. So look what happens here in the morning. Nugget gaps up. So now there's two options, right? If it gaps up and goes sideways, you're going ORB. But if it gaps up and it doesn't want to go sideways, good, it starts coming back. then you're looking at quick pullback buy. So you're just mapping it out. I got two options. Go sideways, I buy the break. If it starts to pull back, I buy the pullback. So once this thing comes in, taps that 9 EMA, you get a green candle to hold, you're buying, put your stop under, buy, set your stop, let her rock. You're getting into the breakout. You see it breaks out now, right? Why would you buy something at highs if you can get a little lower? You buy high, you die, right? That's just the way it goes. I lost so much money in my life on chasing, I can't even count. And then you're just scaling out along the way. Use your moving averages, use your trend to guide you along the way. Remember, you can always re-enter a stock too. Take your profits. NBEV. So I very rarely trade small caps, but I've been diving into the dark side again the last few weeks. I'll tell you, I've been a lot more stressed than I used to be. I like a very easy style of trading now, but I've been lured back in. So NBEV pops up. Now, if it pops up here and goes sideways, good. I ORB it. But if it pops up and starts to pull back, I'm just watching. I don't know if it's going to stop at the 9 EMA. I don't know where it's going to stop. I don't care. If it pulls back to the 9 and it starts to hold, I'm in. You get a green candle to hold, more than enough confirmation for me. I put a stop under. Now, if it's a wild stock, I might buy half position. And as it starts to confirm and starts trending higher, I may double up. If it gets really hot, I may triple up. We are in the business of taking risk. If a stock starts to align, your first ad may just be an ad. You will want to add risk to the trade as it starts to confirm at the right spots. We are in the business of taking risk. And you only need one hot trade every day to make your bones, right? So as it's starting to work, don't be afraid if you see the pattern to get back in. I'll risk my whole daily stop loss if I find a stock that, frankly, is one of my grade A patterns. Guys, so judge your patterns. If you see the hot one, don't be afraid to keep adding. So guys, strength, ORB, or quick pullback buy, only two options. I mean, you can probably figure that out, right? That's not that bad. If you just wait for two, you can do it. So how do you want to get better as a trader? Everybody here could still be better, right? First few things you want to do to get where you need to be. Number one, you want to have a list of go-to patterns, go-to setups. I have 18 different setups I trade. I don't use them all, but I have 18. I gave you my two favorites. You have to know which ones are your best, and they'll kind of rotate and change around at times. Certain markets require certain setups. But those two I showed you, I use them every day for a decade. For a decade. Because it's easy. One's on strength, one's on weakness. They're pretty good. But you want to have a list of good group of go-to setups. If you don't have that, if you can't document what your setups are, how you trade them, a business plan for them essentially, and what your statistics are on them, you're going to be missing out. For example, I'm like a stock doctor. You call me up, say, Doc, I'm having trouble trading. Say, what's wrong? You say, oh, I'm just, over trading. I don't know. I'm just not making money. That doesn't tell me anything, right? But if you call me up and say, Doc, I'm having trouble. I say, hey, what's your win ratio? Da-da-da. What's your average gain versus your average loss? Da-da-da-da. How do you trade in the first hour versus the second hour of the day? Da-da-da. How do you trade during the close? Da-da-da. How do you trade when the S&P's up versus down? If you don't know these, then I can't come in and fix you. But if you have those statistics, it may just take a quick 10-minute call, 30-minute call to dive into the numbers and then apply solutions. A lot of times in trading, just taking out one or two small things can actually make all the result. Sometimes in trading, you just need to cut things out. You may be trying a pattern because somebody else is, right? Or you hear about it and you're trying it. You pull that pattern out, the rest of your trading stats look pretty good. In trading, just accentuating your strengths, finding out how to get more of those trades can sometimes be the key to winning and losing. Number two, routines. How and when you find stocks, right? We've been talking about trade ideas, of course. What's your routine? How do you scan? How many stocks are you looking at every day? I usually look at about 1,000 stocks a night. Now think about that, 1,000 stocks a night. How many are you looking at? JC does 3,000 a week, but that's not 1,000 a night. 1,000 a night is 200,000 plus charts a year. Think about that, 200,000 a year. 10 years plus I've been doing this. I've looked at millions of charts. There's not an angle I haven't seen. See, you can't get past the work. In the end, the work is the work. You got to do 1,000 charts a night, let's say. So if you're doing, say, 50 or 100, how can you ever catch up? You can't, right? And this is a game. You're competing against the smartest, most crooked, and well-capitalized people on earth. In trading, there's edges. You can have an edge financially. You can have an edge via experience. You could have a mental edge via discipline. Or you can have an edge by just out-fucking working people. That's an edge too. If you're going to compete against somebody who's smarter than you, has more experience and more money, then that part there is the only way you can even the playing field. You can have an edge by learning some good strategies, but the main thing that you control is, can you build your edge via your hard work? Because that's the thing, you're competing against people that are better than you. And that's how you even the playing field. And if you can't go there, then this game is over before you even started. You'll spend years going to fucking seminars, reading books, and go nowhere. You can read all the books you want. You can go to all seminars you want. But if you can't look at the charts and do that nitty-gritty homework every day, then it's going to be really difficult. But if you can, you've gotten yourself in the game. You've gotten yourself to a spot where you can start recognizing things. See, scanning for stocks is not exactly just about finding charts. I mean, I can, call up some friends, go on Twitter. I can find a few stocks to trade. I can go on my trade ideas. It'll give me some ideas. Scanning and going through that 1,000 charts a day is about training your eyes. It's about the repetitions. See, when you go through that many charts every day, you have a pulse on the market. You know what the market's doing. You understand the ebb and flow of how it's moving. You feel it when you trade. Going through 1,000 charts a night, it trains your brain to all the different patterns. You start understanding certain stocks you can never buy on strength. Certain stocks do this. Certain stocks never break out in the middle of the day. You start to build a memory bank of exactly how these things move. And that cannot be replaced. There's intuitive trading, right? Trading intuition. The only way to build that intuition is with repetition. You ever see somebody trade? You watch me trade on video. I trade in front of my students every day. I'm wheeling and dealing. I look at a chart for 1 second. Boom, I'm in. Boom, 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 boom. I'm in. 2,000 shares, 5,000 shares. I mean, I'm moving fast. How can somebody move that fast without thought? It's just by repetitions. And so your scanning routine will help you build those mental repetitions so you build up that intuition. Guys, that's your ball game. That's where you've got to start with this thing. Collecting and analyzing data, right? We talk about that. Have a journal. It sucks. It's boring. There's nothing fun about journaling. But you need it because you need to know what to do, right? You need a guide. And so collecting and analyzing that data is going to be huge. Then knowing your personal patterns. In the end, most of the time when we lose, after you've been around for a while, you're losing because of something else. We all have personal patterns that get in the way, right? You have people you fight with in your life. You have things, some people, they eat when they're stressed, right? Some people drink when they're stressed. Some people do this or that. Understanding your personal patterns is a big part of how you're going to develop. For example, for me, in 2009, I had an awesome streak going, but if I lost on my first trade of the day, my whole day was ruined. I always crushed it the first 2 trades of the day, but if I lost that first one, my day was busted. Knowing that, right? Figuring that out, that first trade was always getting me in trouble. So about once a week, I lose on the first trade a day. So knowing the pattern and then coming up with a plan to fix it is very, very important, right? And so a lot of you guys will have other stuff like that. I've heard people, I get in a fight with my girlfriend, I lost money. Good. If you get in a fight with your girlfriend, find a new girlfriend, or don't trade when you have a fight with her. Easy enough. But you got to know those personal patterns. And then the last thing is just, right, building a winning mindset. Do whatever you can to hang out with cool people, strong people, charismatic people, people that make you feel good. Build yourself into a winner. The easiest way to do it, hang out with some other winners. Let some of their swag off on you, right? When you can do that, you start thinking and acting like that. I've been very good in my life about finding good mentors, people that win. Man, it rubs off on you. So surround yourself with the right people. Have fun, and remember, you can't get past the work. So you're going to have to do the work no matter what. Buy all the classes you want. You got to do the work. Thank you. God bless you.